BNEWS Weekly Special Report. I'm Phil Gallagher along with my guest today, Town Treasurer, Tax Collector Gary Gianino. Welcome, Gary. Thank you for joining us.
Thank you, Phil.
Gary's a graduate of Bentley University with a BS in accounting. He's also a CPA and also has a good amount of time in the commercial sector as a CFO and COO of real estate companies. He's also a 18-year member of the Board of Selectmen, serving at least 4 times as chairman, if we can remember, that far back. He's also a several-time chairman of the Ways and Means Committee. So you come to Burlington, you're a year and a half now in the Treasurer Collector's office. Broad spectrum background in terms of money. That's what we're going to talk about tonight in a broad sense. But let's start with a cultural question, or maybe a cultural financial question, but the impact of COVID-19 as it relates to the overall financial stability of the municipalities, the commercial industrial sector, particularly the hotel sector. Are we seeing something that's a long-lasting impact in terms of people not doing as much business travel, people not going to the offices frequently? Are we going to see commercial impact in terms of leases rolling off? Broad question.
Very broad question.
Hit it out of the park.
Time will tell as far as hotel in the hospitality area. I think from my sense, people are itching to get back into the public face-to-face. Zoom calls, WebEx calls, they have a functionality, but getting down to that business. And I watch my children are in the business world, and who's traveling, who's gone back to the office. You may not get to that 5-day-a-week right away. Some instances, you need that collaboration. You need people to be in there. I think the hotel, I think, will take a while to get back. But I remember traveling right after 9/11. I was happened to be changing jobs, and I was going to have to start going down to Maryland. And at first, those planes were basically empty. But within a year, people were back, and people were doing what they were doing. You see a lot of people. You see the tourism still being active. The business, it was starting to come back. I think it will get back, but it's going to take a year, 2 years. You look in the commercial side, it's certain segments that are doing well. Our values this year from the assessors, the commercial values went up $1 million. That's not the same from prior years, but the office has maintained well. As those leases burn off, is it going to switch from typical office to life sciences? I think you're seeing that. We're seeing that in Burlington. The economic development officers, I think we've looked ahead. So having that position open up has proved benefits. We have people coming in.
Well, life sciences is not something you can do in a Zoom call in your jammies.
Correct. Correct. They're signing up somebody now, and the building permit might be close to $1 million. The fees generated from that. We lost that in the last year and a half.
Yeah, it was $5 million, I think, 2 years ago.
Correct. So. We lost the meals tax, as you talked about, that incentive. The hotel, the meals are back. The hotels are not.
Right. Now let's look at the residential side. I think in fiscal year 2020, which would have been 2 Junes ago, right? Okay, somewhere in there. We had a $400 million increase in the value of the residential sector. And that's visible throughout the town. Everywhere you go, you see any pre-1970 a ranch or a split level being knocked down and replaced by McMansions, as they're referred to, right? How long do you see this going on? And we'll talk about it in more detail in terms of interest rates. But if we see interest rates rise, how long do we see that type of value remaining in Burlington?
The values, I think, will. The Fed. I was in a call yesterday, a Zoom conference call for a few hours with Prim, who handles our pension reserves.
That's a state pension investment firm.
And they talked about the Fed having 4 increases over the course of the year. What's that going to do? They're trying to counter inflation. You want high growth, you want low inflation, that's going to do the best. And it's a juggling act of where they meet that balance. With interest increases, especially in the mortgage side and the residential side, I think you're going to see some of those prices, some of the prices level off, if not dip a little. Will they go back to, it's not like it was 2008 when everything took the big dive. I don't think we'll see that again. People still need a place to live. But I do think the prices will stabilize. You can't keep going up. For you and I, think about where we bought our homes, and how do people now buy these homes?
Afford a $600,000-700,000 mortgage.
Right.
But mortgage rates are 3.5–4%. Now, early in your career, shortly after the Carter administration, when inflation was running wild, we had a Fed funds rate, I think, of 14%. We're seeing inflation now, last 2 months, highest monthly inflation rate in 40 years. Those days, in 2008, for instance, the Fed was putting the money they were printing on the balance sheet.
Right.
This money has been distributed, and everybody's got money, or somehow they got money from the government. Is 4 or 5 interest rate hikes enough in your mind to control the rate of inflation that we're seeing now?
Not being an expert in it, I'm hoping it does. I hope it stabilizes. I think a lot of it's pent up, not a lot of it, some of it's pent up by the media, and I'm biased against that because they sent out these little tidbits of information. They don't give you the whole story.
Right.
And people in the economy, not the economy, but people quickly respond to that. So they stop doing this, or they stop doing it, or they go.
The emotional aspect.
The emotional aspect. We had this storm last week.
Get 30 rolls of toilet paper.
Right.
It's going to snow.
And everybody was talking about the blizzard of '78.
Oh my God!
That was a lot of fun.
Yeah,
we were young.
That's right.
I'm thinking there's going to be some downturn. Hopefully not. They're really trying to balance it, and I think if the economy slows down too much, you may not see those 4 increases in interest rates. And some people say there's going to be 6. Who knows?
Well, the 30-year Treasury is at 2% right now. I think it peaked at 9% at one point in time in the past. So that would be a long climb from here. It would have to, have a lot of rate hikes in order to get that.
The banks, where I was seeing 10 basis points, 1/10% for interest.
Right.
Now all of a sudden that's starting to rise to 50 basis points.
Well,
half a percent.
I can remember 14% CDs when Carter was in, and
Right.
even the money market. Let's say post 2008, say 2010, you could get 5% in the money market. You can get 25 basis points right now, I think, in the money market.
Right. Well, I'll tell you, when I came into the position a year and a half ago, we had CDs. Brian had set numerous, maybe 7 CDs or $1 million. Staggered, with 2.5, 2.75. As they were maturing, I was, what do you give me for a year? Interest, or 18
40
months,
basis points.
Less than that.
Less.
0.10.
0.10.
Right?
Yeah.
0.10%, 10 basis points.
Right.
The money markets on some of the banks, I was still getting 100 basis points or 90 basis points. Right. So I started moving money around, taking them out of banks that would offer me 10 basis points and moving them into money markets. Right now, we don't have any CDs. They just weren't worth it, but I got something from a bank offering 0.5%. 50 basis points. I'm saying, oh,
can you spare it?
I'm back in there. But the commercial values, people talk about our increase was, say, $1 million. The office held. The retail didn't hold. There was a decrease. The hospitality took a decrease. You're seeing the life sciences coming in. That's maybe why the office or the industrial sector, those different segments of the markets increased. And I think Burlington's poised, and I give credit to the planning board and the Board of Health and the economic development officer to really transition Burlington.
Well, the interesting thing, well, let's segue into Davidovitz. Henry Davidovitz, I guess, said 3 years ago that 50% of all of the malls in the country will be vacant, will be emptied as a result of, again, a cultural shift. I mean, you drive through Burlington and you don't go a street without seeing an Amazon or a UPS or Federal Express or the post office delivering something.
Right.
How are we poised in terms of our market breakdown of values, retail, commercial, industrial, et cetera?
Other than, well, there has to be a slowdown in retail.
Mm-hmm.
Now, I was still a town meeting member when Sears came up. I voted against their proposal. I think they were still building the elephant.
Mm-hmm.
We have the opportunity with Lord and Taylor, or the owner of that building, they own that segment of the mall, has an opportunity to do something that other markets have done, and that's put some residential or some mixed use in there. And I know that, I don't know what they're talking about in total, but they've talked about office. They've missed the residential side.
Right.
I think as the population gets older, if you can live somewhere close and maybe with ownership,
Right.
not just with apartments, there's an opportunity there. If you can live, work, and exist within a small area that you don't need your car, it's maybe the urbanization of the suburb.
It's eventually going to happen. It's happened radiating out from Boston after the last
Right.
200 years.
When
Which
Third
brings
Ave
it-
came in, originally there was going to be apartments and there was going to be condominiums or townhouses. There are no condominiums, there are no townhouses, it's all apartments.
Right.
Because from the tax structure, it helps the developer. They're going to get capital gains if they sell apartments 2 years down.
Well, that's been my argument. I mean, if we look at Bobby Murray, what he did in the center of town, he put all condos in, which, regardless of where the price point was, that was an opportunity for home ownership so that the resident could accrue that 7% annual appreciation. Whereas all of these other big deals have all been rentals, as you say, and now we have almost 20% of the population of the town is transitory in terms of not being stakeholders, in I don't mean that in a negative way, other than they're not property owners. So perhaps from a tax collecting standpoint, revenue stream might be larger behind what the old Jordan Marsh was. There could be room for a lot of one-bedroom condos because, you know, our own progeny can't buy it in Burlington at this point, unless mom and dad can fork up a couple $100,000 for a McMansion, you know?
Right, 1 to 2 bedroom condos. Within that structure, people could walk down and do this. And there's opportunities like that people really have to get hold of.
Conceptually.
The conceptual change. Woburn, the old Woburn Mall, I don't know what they're calling it now, not Woburn Place or Woburn.
Well, they've done that very same thing.
Right.
Right.
And I don't know if those are apartments or those are condominiums.
I don't know either.
Why do people build apartments? Because the developer holds on to it for a year, sells it, he gets capital. The
Sells it to a
person
REIT, right?
Right, gets capital gains tax. If you build condominiums and sell them, you're going to get ordinary. You're going to get charged ordinary income because that's your business.
Yeah, short-term capital gain is ordinary income.
Right. So.
And that's what, right now, that's probably, depending on the size, that could be a 16% difference in your profit.
Correct. Correct.
Okay, now you're a longtime campaigner in the town of Burlington. You've
Yes.
been involved in a number of campaigns, both as a candidate, as an opponent,
Yes.
and as running campaigns. So I would ask you this question from an observational standpoint, from an analytical standpoint, since you've been an analyst for BCAT at points in your career. What do you think about the current political situation in Burlington? I mean, in my view, it's appalling. We have a town-wide race. We have one contested race. Is it apathy? Is it laziness? Is it happiness? What do you think?
I think it's contentment, but it's a false contentment. I mean, you and I have both been around for many times. I remember after one of my campaigns, and you were doing the post-election, you said, "How does it feel to be elected with the smallest popular vote ever in this town?"
Well, don't worry, that record has been broken.
It has.
A number of times.
And I don't have an answer for it, but people, why did I run originally? Well, I always wanted to get involved. It was in my nature to get involved in the town. When I moved here, and when I lived in Medford, I was involved. But I felt I had something to give. People are busy. They're doing a lot of different things, so do they have the time? People that are really busy they get involved, are busy people, but they not
Juggle.
They juggle, they thrive, but they want to be involved.
Yeah, if you want to get something done, get a busy person to
Right,
do it.
right. I don't know why the voters, is it because it's a Saturday in...
Yeah, but it's always been a Saturday. You're always mowing the grass.
But a lot of people that move into town come from a city or somewhere else where they're voting on a Tuesday in November. So April confuses some people. We used to say that the communication wasn't good, but we put out the sign in different areas of the town, and the clerk does a good job, vote now.
It's on BCAT consistently.
BCAT, the newspapers, how many people read the newspaper, how many people read BCAT. Now they're watching Hulu and Apple Plus, and and things aren't going that bad. It's not like in 2006 or 2008 when we had the great storm and the 23% increase. I was chair of the board.
Yes,
I didn't see it coming.
Never fails to bring that
Yes,
up.
he tells me all the time. But that didn't really cause much of a stir. There just might have been one or two people. When ICE came in, the Immigration Enforcement,
New England Executive Park.
Yeah, New England Executive Park. That created some stir. A few people rose from that involvement. And some of the people who complained about it, there has been no change in our bylaw. There's been no change. Once it simmered down, everything seemed to move ahead. We have some...
I guess we come out of the period of the poisoned water and all of the brouhaha that was caused by, not caused by people like Margaret Vaccaro and Ann Rowe, et cetera, but their reaction and the need to get on board and get something done, they were pretty vociferous at that point.
But yeah, they were. But you could walk down the corridor after a town meeting, and talk to Ann Rowe as if
nothing happened.
Nothing happened.
It wasn't your fault anyway.
Well, I remember one meeting. It was a select board meeting, or selectmen then, select board meeting. I voted not to overturn an appointment the town administrator was making, where the rest of the board voted to overturn it. And on the way out, she was upset at me. And I said, well, Ann, you were for the candidate, that appointment. I didn't vote against it. She said, you weren't strong enough to convince others.
That's right.
But there were.
It's your fault other people had an opinion.
I think when I first joined town meeting, there was the Frank Baxters, there was the
Larry Benassi.
Yeah,
sure.
Who, and I right now I always call Frank Monaco the
Larry
Benassi.
Right. Anne Marie Baden was there.
Yes.
Arthur Ferrero was there. Dan Valenti, Roberto.
People.
Yeah.
A lot of active people. And where people came out of town meeting or came out of Ways and Means, and they were then running for office. They were involved. They knew the but there was an active group. Yeah. And the tone, I noticed the tone when ICE, the change in the town a bit, that people started thinking negatively about things versus the positive. And it's a small group, but in society today, we always talk about the negativity of what's going on, not what's going on right. Or where the
pretty rosy place.
Right. But people are still satisfied. The tax rate hasn't increased. People, and $995 for residential, but the average value of the home has increased from $574 to $600,000. Right. 274 average. Right. And when I hear people say, "Well, we can afford it in this town," there are a lot of people. When the average, there are a lot of houses below that average, and those people are on fixed income. The governor right now, and the town and the assessors, I know, are talking about some things to help with the exemptions for seniors or veterans or.
But we're the ones who have all the money, Gary. You know that. If you haven't got a couple of bucks after working 60 years,
Right.
But you're right. There are some more needed opportunities in terms of that lower level of entry into the market.
And real estate, I was there in the 70s, interest rates was I remember being right out of college, I was working for a CPA firm, and it was a contract up in Nashua, New Hampshire, and they were booming back, but the interest rates, as you said, were 16, 17, 18%. Is this ever going to stop? Now, 6 months ago, you can get a mortgage for 2.75.
Right.
That pushes the price up. As the mortgages increase, I think the prices will level off.
Right. Yeah,
So-
and the borrowing of the developer to invest in a parcel of land, et
Right.
cetera. So let's go over the revenue. We did not have a decline in revenue this year, but we had some Goldilocks aspects of it, right? We had federal money, we had state money, cherry sheet, which is state aid.
State aid.
That was increased as well.
Well, it was briefly, luckily for the town, we only get about $8 million, $8.5 million, maybe $9 million.
It's out of what, 158 million of revenue?
Right.
Okay.
Comes from the state.
Right.
Now, the governor's proposed budget increases Chapter 70, which is the schools, by over $2 million. That's great, but is the rest of the town going to see some of that?
No. What's the schools is the schools. What's yours is partly the school. We know that. We've seen that for years.
Our education system is very important. When I was moving into the town, I didn't have any children. Burlington looked like a nice community. I was very impressed. Within a month or two, I got the recreation booklet. I was like, wow, there's a lot of opportunity here. But funding is, we're lucky that the meals tax funding has gone back. We haven't seen a dip in collections too much, if anything.
Well, that's because we've added 10 or 12 new restaurants.
I'm talking about the real estate tax. On the residential side, that continues to come in. On the commercial side, that continues to come in. There are some people that got behind. We're actively trying to move ahead. In the past year, about 9-10 months ago, I changed law firms. Started changing the process, and of the liability, which was roughly about $2 million in back tax, we've already collected $600,000. We're on track right now. 3 of them just came in today for the final municipal lien certificates, so we're going to get those off. Some of our larger taxpayers are starting to pay, and it's mostly residential. The delinquency, I asked the new assessor what we did for abatements. Yesterday was the final day.
Right.
Commercially, about 13.
13 million.
13 applicants for abatement.
Really?
Yes.
In this last fiscal year?
Yes.
That's extraordinary.
And they're asking for about 20% off the tax. Then that's not going to happen.
Well, it depends on when they get to land court, because in the case of the mall, for instance, I know NEEP was in last year, but depending on what happens in land court, if you get the mall and 50% of it was vacant for a year, they could argue that with some merit that their value was definitely afflicted.
The value of the real estate, though, still remains strong. We just recently had paid out a settlement for a commercial tenant from 13, 14, and 15. So it takes that long.
Now, was that Northwest Park? Was that NEEP? Who was that?
That was Macy's.
Macy's, that's right. I'm sorry. Yeah, I'm sorry that I mentioned those 2 other names. Those are good, solid top 10 taxpayers.
That's right.
Yeah.
And some apply for the abatement, not knowing, and being on the other side of that and filing my income and expense statements, I had gone up against assessors, and sometimes we won and sometimes we lost, but it's part of the process.
Yeah, well, we have an overlay account for that we accrue money on an annual basis for that, right?
Yes.
Okay, let's move on to a couple of other big items. OPEB, which nobody really knows what that is, but they know we have a $100 million liability out for 30 years. So explain to us what that is
OPEB,
and how we're addressing it.
OPEB is the other post-employment benefits. And it's, as you move forward, if people retire, there are still benefits that come to play, 70% of the health insurance. So that's really the big carry forward. It's no,
and their spouses.
And their spouses,
right.
Surviving spouse.
Right.
It's nothing that the top private sector dealt with maybe 10 years ago, 12 years ago. You remember talking about GM or GE not having unfunded pension liabilities.
Yeah.
Well, they go out of business. A municipality is not going to go out of business.
Right.
The GASBs, the Government Accounting Standard Board, start talking about recording that liability on your balance sheet.
Right.
For Burlington right now, it's $102 million.
And this is
102 million.
well, it came down a little. We had a big year in the market. I think it was 5 million, right?
Right.
But
But we lowered the discount rate. So
right. Projecting the discount that we would make in the future.
Correct.
I see. But the interesting thing is this came as a result of probably 30 years or 40 years of it not appearing on the balance sheet and nobody paying attention. So this is today paying for the sins of the past.
Correct. And why do we make contributions to the town? To try to minimize that for the people in the future.
Right.
And we're not required to make the deposits. It's not, but it helps our balance sheet, and it also protects the town's expenses going forward in the future. And it wasn't just Burlington, it was every municipality.
Right.
There are still municipalities that haven't contributed anything. We've contributed about 8 to 9% into a fund, and you're right, we had a banner year, 26% increase. So when I got here, I'd like to say it was my stewardship, but oh, sorry.
Well, that's okay. That would be the political side of you, right?
I had nothing to do with it. We bring all our funds into PRIM, which is a managed account.
Mm-hmm.
It was and
Balance, equity,
and
stocks,
I had
bonds, real estate.
Two venture capital, world growth, timber, real estate.
Well, with all the toilet paper that was bought last week, I mean, you would think that'd be a great investment.
There's probably 12 different segments of the market that they approach, and they have specific parameters for how much they're going to put into each fund. Mm-hmm. So this coming year in 22, they're adding 1% to private equity, and they're decreasing a percent, I think, in global ventures, trying to balance it out.
Rebalancing, sure, based on returns that came in, take a little profit, etc.
And they base their returns on 7% over the term. So when we start talking about a discount rate right now, and we use Siegel, another group that deals with this all the time, we're at a 7% discount rate. Lower than some other municipalities or some of the retirement plans, but I think it's prudent to be more conservative and thinking what your returns are going to be versus as this big year of this increase we've had, I think it's going to happen every year. It's not going to happen this year.
Of course not. No.
It's not. It's going to happen.
Just like 2008 doesn't happen every year either.
Thank goodness.
Let's talk about bonded indebtedness. We have a AAA rating.
AAA, yes.
I think our outstanding debt right now is 80
million.
However, I don't think all of the DPW is on yet. Those two buildings.
They are.
It was 8 million or 10 million.
That's what we bonded last year. 6
Okay.
million was banned last year. That was for roads, and that was from some MWRA connections. We had a meeting yesterday with our bond consultant. We're going to roll those bans over to another year, and we're trying to minimize what do we have in free cash, what do we have, and looking forward, going forward, what are the needs?
Staggering out that debt.
Right.
Well, let's look at what's coming up. We have the PFAS building, which I want to ask you a question about the state on that. We have PFAS. In my view, the second most important is the police station, which we can talk about.
Oh.
But then you got the school department is coming in for up to 30 million. And that does not include another 15 million for the labs they're talking about at the high school. Another probably 30 to 40 million if we talk about the boilers and the HVAC. At least 30 to 40 million. Then we've got another 15 to 18 million dollars in the final MWRA connection. So I mean, we're talking about roughly $100 million on top of, and that's without counting the Pine Glen, which will need to be rehabbed as well.
Correct.
So, was it time to slow that drain down a little bit, or can we absorb $180 million?
The plan had the 20-year plan had most of those projects in there. The PFAS was not. So, yes, we can absorb, but if the Pine Glen, Fox Hill, or as I told Chris Monaco we were going to call the new school the Fox Glen. We had a building study committee 10 years ago, and she hears me say this, I'm going to be in trouble.
You're going to be in trouble.
That's okay.
Because I think she agrees with me that the biggest blunder that the town meeting had made recently was allowing the Wildwood to be knocked down.
Yeah.
We wouldn't be in this situation if we hadn't knocked it down.
No,
But
I
that's
saw the
another
inside
story.
of that building, but when they left it.
Right. But you can't destroy bricks and mortar.
Right.
Mortar, excuse me.
But it did produce a beautiful park for the.
Yes, it did, but it didn't produce any revenue.
No, it didn't. It didn't.
Unlike when we were on the board, I mean, the Meadowbrook laid fallow for 10 years,
Right.
Refused to knock it down, and that ultimately was rehabbed by the lessee, which was lessee.
It's interesting you mentioned Meadowbrook, and people say, why do we release out the school? I said, in my estimation, it's almost like a charter school within a town. It's a private school.
Sure.
And it provides a service to the residents, so it's some diversification from that aspect.
Yeah, but plus they did the rehab on their dime, plus they did the expansion on their dime, and they weren't going to do that without an extension of their lease.
Correct.
So, I mean, there was a good business decision at the time.
There's a lot of planning, and you've been involved, a lot of planning on a day-to-day basis. I don't think everybody understands what goes on in town hall. They hear a lot about the schools, and for a lot of people that have children in the school system, they live it a bit, they see what's happening. But in that town hall, there is this undercurrent that people in town hall are just sitting there twiddling their thumbs. It doesn't happen there. I remember I was on the board of selectmen when we initiated the assistant town administrator. We had a town accountant, we had an assistant town administrator, we had a town administrator. Right now, we have the town accountant and the assistant town administrator, that same person. How that happened was after I got off the board.
Well, but they picked up a budget analyst and a couple of others.
But from a leadership, they did pick up some of those things. But
well, I know John Denicio is busy because in preparation for tonight's program, I asked him to send me some financial information, and he sent me the consolidated report. It turned out to be 176 pages, so I'm semi-prepared for you, Gary.
John and Paul, our town administrator, do a phenomenal job. I mean, Paul's been here for, I don't know, 18 years, 15 years, and has an affinity for the town.
Yeah,
John,
Mercy before him.
Mercy before him. John is very knowledgeable. I go to him with some questions. I'm looking things up through the state, and I'm trying to, because it can become overwhelming. I go up and see John, he gives me the answer, then chides me a bit about not knowing that answer, and I leave. But we're lucky to have people who care about the town, work for the town, and the people in town hall. I don't see people sitting around. I was on the outside. I was considered the board of selectmen almost being board of directors. Let your department heads do what they do.
Sure.
And I'd make some suggestions. They'd say, "Right, Gary." And now I'm on the inside looking and understanding why some of those things can't happen.
Right.
And some of the differences. Change is difficult sometimes.
Right. Now let's go back in time again, because I had this question and nobody seemed to be able to answer it. Perhaps you can remember. As I recall, during the passage of Proposition 2.5, it finally ended the onerous fiscal school autonomy, but it also put in place, I thought at the time, that any state mandates were required to be funded by the state in full. Now, I thought that passed at that time, so I'm wondering why, if everybody's going to be stuck with $1 billion, $1.5 billion worth of PFAS improvements throughout the state, why are the municipalities left holding that bag when it was specifically struck by the DEP? You know, we're going from 70 parts per trillion to 30 parts per trillion, and we're going to spend $1 billion?
Right.
Doesn't make sense to me.
It doesn't make sense to me. But the state did have that mandate, but that changed. Think of the Quinn bill. Originally, the Quinn bill, the state was going to pay for this, the state was going to pay for that. My concern was always, what happens when the state decides they're not going to continue to fund? And at the time, in Burlington, we approved the Quinn bill with the caveat that if the state failed to live up to what they said they were going to provide, then that would go away. I was no longer on the board.
Prescient.
I was no longer on the board when that vote came up, and they agreed to pay. Did I agree with the board? No.
No.
And it has nothing to do with the police officers. I think we're very lucky with the officers we have in the department. But at the time,
Well, you know, that was a collective bargaining issue, which, you know, the board at that time, well, let's not criticize the board at that time.
I don't want to criticize. I just disagree.
Since we were around varying time.
Listen, neither one of us were right all the time.
Yeah.
And
What?
I remember I was just on the board for a couple of months, and I made a comment about the recreation department, and there was a recreation commissioner who came to the board the next meeting, and he
Lacerated you guys.
yes, he's in this room with me, and he didn't lacerate everybody. He said, "Mr. Giannino, stay in your lane." And I went, "Okay."
Good, the arrogance of politicians.
But
Huh?
you know, it's a who has that crystal ball? I don't know.
Yeah.
So it goes back to why aren't there? Is there a new group coming up that I think people care about the town? They just have their little aspect that they're working with. We have a lot of volunteers. But when it gets to that government, because everybody has such a negative connotation, they don't want to get involved.
Don't necessarily want to be a target of criticism.
Right.
Now let's move on to Franklin, I believe. Was it Franklin back 2 years ago had a cyber attack, a cyber fraud? It cost them $600,000, I think. Then we had the meat company, then we had the power company. There's a lot of this going on. What is your office doing to protect the funds? How is collections going on? What automation have you put in place or advanced? What advancements in time and money as quickly as it can be invested, et cetera?
Well, we have a cyber security seminars.
ISAC, something or other. Right?
Well, ISAC has come back.
Yeah.
A new group, very intelligent group. But the IT department, through the Commonwealth of Massachusetts, we had all the department heads. We had 8 meetings, different tasks. Everybody in the town hall had to go through these exercises. I just got one the other day that said they had sent me that I hadn't completed, which was a shocker to me because I was trying to do it as quick as I could when I did get them. But it's imperative. We don't do wires unless they're verified. If
Wire is instant money.
wires.
Right.
I'm a big proponent of technology with that. If we can do things by the automatic clearinghouse, which is an ACH,
right.
or an electronic fund transfer, or wires, that we don't have to write checks.
Right. Well, one is 25 cents, the other is $25, right?
Right, the wire is $25.
Right.
So the less checks we send out, the more we do via electronics with the safeguards in place. I think we're better off as a community. Nothing goes out. We have some repeat wires we'll do every week. Now in payroll, I do those on the payroll, and if not, my assistant treasurer does them, and that's it. We've identified areas. What happens if the system goes down? Are we stopped? If we get attacked within the town, we've had to come up with a plan of what we would do. I've gotten 50 payroll checks. I got 100 payroll checks, which we're never going to use, and they're sealed somewhere in a vault. I have vendor checks. If we get closed up,
Got to go to hard copy. Huh?
go to hard copy. We can still take in money. We would hold it. We would make that deposit, but we still have the backup. We have, and so we would be able to operate. Different departments are going to have different. Every department has their own concerns for cybersecurity, but we continue to look at it. It's a town in New Hampshire. I won't even repeat. They sent out $2.5 million. I said that had to be collusion among a few people.
Right.
How do they do that?
How on earth could you do that?
And in the private sector, I almost sent out $35,000 once. It would have been wrong. When I got to the town, I said, I've been a victim of ransomware. Luckily, IT was one of the departments. I had a redundant system, and we had it all saved. So when we got hit, one of our companies got hit with the ransomware, I basically gave them the wave and said, see you later.
Went to Plan B.
Went to Plan B. It took 2 days, but we were back up and running. You have to be concerned about people's social security numbers. If a vendor asks for something for our banking information, I'll give them the bank routing number. I will not give our account number over the internet.
Yeah, just put your name,
Just
the routing number of the bank, and it'll find its way to the account.
No, they have to call me up, or they have to
I see.
call Andrea up, and we'll give them the account number over the phone. And we only do it if we know who it is.
Right.
So if someone says, I'm calling for Phil Gallagher, I'm going to say, no, I need to speak to Phil
Yeah,
Gallagher.
right.
So there are things you can put in place. It's going to happen. We're going to get hit at some point. It was shocking. Joe Bongiorno was showing us some of the companies you would have never thought.
Yeah, well, the pipeline company that get hit down in Louisiana, that was extraordinary. And what was it, the sausage company, the big international sausage company, was it 50 million they wanted?
Oh, yeah. I'd say these people are brilliant. These people that are doing this, some of them are brilliant, some of them...
Brilliant thieves, that's
brilliant
the problem,
thieves.
you know?
But there was different ways. There's no more the brick and mortar bank robberies. You still have them maybe now and then, but you're not going to have the heist of Depositors Trust in Medford that they had, where they broke through. It's just different ways of stealing and thievery.
So what do you see as challenges, as a final question, what do you see as a challenge off into the future for the department and for the town?
For my department, because I'm staying in my lane,
You stay in the lane.
I will continue. We just changed our banks that we have the majority accounts with. In the course of dollars and cents, we're going to save probably $18,000. It's not much, but it's the nickels and dimes. Continue to look to opportunities. COVID did result in less people coming in across the desk and using different means, using our lockbox service. We changed lockbox services, created some sort of disturbance which I didn't foresee, because it's now going to a Woburn post office box versus Burlington. People don't know it was going to if you sent the check in, it was going to a lockbox service in Medford. So somebody was picking it up and going. But we'll continue to look at those avenues. Right now, if you pay online, and if you want to pay by check, it costs 40 cents. That's less than a postage stamp, but I'm looking into seeing what the cost benefit of it is. If we waive that 40 cents, will we get more people paying that way?
Quicker.
Less processing, get the money quicker.
Right.
We're trying to eliminate, some people talk about, takes 6 to 7, 8 days to get a check cleared from their bank. And they said, we gave you the money, what happened to it? Well, we're closing that gap. And the new lockbox services.
Well, ACH would do that for you.
ACH would do it. So, and the biggest issue right now we're having, I see from the staffing standpoint, is the motor vehicles. We send out over 28,000 bills in the course of the year, during the year. And
well, that's personal property taxes.
no,
right?
well, personal property tax 4 times a year, but the
I see.
motor vehicle excise
and
tax.
water too. Do you send the water and sewer out as well?
Water and sewer goes out by the DPW. People get them, but it's staggered when they get their bills. So there's more communication and billing. We need to, I still think, strengthen up some of our systems and approach, and remember who our clients are. Our clients are the residents of the town of Burlington.
Well, one more question on motor vehicle. That used to be, back in the days of Ed Fogelberg, was one of the major delinquencies throughout the town. People just didn't want to pay that. What kind of delinquency rate are you seeing in that category?
Well, the fact that they lose their registration now when they don't pay their motor vehicle
It's an
tax,
incentive there.
it's an incentive. And we send it out to a deputy collector, it's called, and they go after these people.
Yeah, once it's beyond the expiration date.
Your license renewal, your car renewal, you're not going to get it unless you have your excise tax paid. But the problem comes in with all these leasing. People lease the vehicle, then they turn in the lease, they don't send in the
Right.
information, so the assessors have to deal with that. We have to
Leasing
deal
company
with it.
doesn't want to pay it because it was
Right.
somebody else's obligation.
Right.
Yeah.
There's a lot going on between the assessors department and the tax collector. We collect. I tell people in a simplistic view, and it's, I don't mean this I open the old cigar box and we collect the tax. And then every week I open up and I pay the payroll, the benefits,
the
and our
bills,
vendors. That's the important. So I look at us, we're there to safeguard the dollars and cents. And the money we have in the town can be close to $150 million between what I have and what I owe in debt. Right. I can't spend that, what's coming in and leaving. It's,
right. Well, we had one more item too, is free cash. We were pretty stingy last year in preparation for this. Now I understand from Mr. Sagarino that we're north of 15 million in free cash in preparation for the next fiscal year.
We are. Departments did not spend all their money. So schools, we got money back the last 2 years. I don't foresee that happening.
Praise the Lord.
I don't see that happening. So free cash moved up. Mm-hmm. People are spending again. We have deferred some capital items that needed. Right. The town hall is in need of some capital improvements. Mm. My department.
Get in the back of the line.
That's what people say, but it's one big bowling alley, and I have the collectors, I have the treasury side, and then I have payroll benefits. There's confidentiality that's needed. Yeah. So we're looking at that. There is some larger projects. I'm cold every day. So.
Okay. Unfortunately, we've run out of time. I'd like to thank our guest, Burlington's Treasurer Collector, Gary Gianino.
Always good to see you.
Welcome aboard.
Thank you.
And good luck. You'll need it. Thank you for joining us, and good evening.